Okay, everybody, it is me, Gregory Mannarino, and we do have to talk. Lots of stuff going on. Some of it is kind of troubling too, so let's do that. So, yes, it is Friday, April 8th, 2022. Let's start off with economic news right off the bat. On the macro scale, the United Nations is now reporting that global food prices have hit an all-time record high, and it's not going to stop. That plays right into some other economic news we got right here in the United States. Listen to this. So, it seems that U.S. citizens are burning through any savings that they might have had just to try to make ends meet. Meanwhile, what did we just find out? Consumer debt is soaring. I mean, what a bad spot to be in for people. And I hate to hear this. Again, I have explained for a long time the middle class is under attack. The middle class is becoming extinct. And I mean, this is clear evidence of that. Burning through savings, most people have no savings, and they continue to borrow and borrow and borrow more. Well, you can see where that's going, people. As we all know, the three-tier society, it's going away. We're going back to a feudal system, a two-tier society. It's in our freaking face. Anyway, with that said, we need to look at a couple of other things. Let's go back to the market real quick. On the market, we have stock futures that are higher, a 10-year yield at 2.7. What does that tell us? Well, a couple of things. Hold that thought. So with the 10-year yield at 2.7 and the relative strength of the dollar stronger today, market risk is rising, and this is clearly being reflected in the MMRI, Mannarino Market Risk Indicator. Look, this is not a crash indicator. I know there are people out here that are trying to use it as a crash indicator. It is not. It is a risk indicator, and rising risk in the market is a double-edged sword. Well, it means, number one, that we should expect the possibility of some kind of an event that could trigger, let's say, a sell-off in the market, which could be substantial. But again, watching the stock market, all well and good, people. You know that. But it's the driver, it's the debt market that is key here, okay? And until we see that spike in the 10-year yield, I'm going to keep saying this over and over again because every day, you have no idea what it's like to be me. My email box, Greg, when's the crash going to happen? Blah, blah, blah. I have no idea, nor do I care. I don't care. So what we do, you and I, is we're observing the debt market, trying to gauge, when the big one is going to occur. And it's very simple to know. We're going to know when that happens when we see the uncontrolled spike. This rising lately in the 10-year yield, yes, it is. I don't want to say it's alarming. And maybe it is a little bit of a yellow flag. It's not a red flag. But it's a way that you and I, by gauging market risk and following it via the MMRI, we can have a very good idea of what we should be doing with regard to the market. Having more risk in the market is a double-edged sword. You know that. More risk, more reward. But at the same time, we must raise our awareness, all right? That's how this whole thing is playing out here, and I think you understand that. Anyway, so with that said, we got stock futures higher. The setup for the market this morning is not bad, all right? Futures are higher, 10-year yield 2.7. The relative strength of the dollar is not great for the market, but I don't think it's anything to get really worried about at this time. Let's look at a few more assets here. Crude oil still hovering about $100 a barrel, going much higher. There's no doubt about that. Okay, just be ready. And we got a warning today from a few Wall Street banks. Hold that thought too with regard to commodity prices. But you knew this anyway. I've been telling you need exposure to commodities. But again, hold that thought. So we have gold and silver under some pressure. We have cryptocurrencies under a little bit of pressure after the troll out there, whatever she is. She's some kind of like a gnome or I don't know what she is. Janet Yellen, again, talking about how cryptocurrencies are a threat to the financial system. If this were only true, I mean, this thing is so twisted. It's a freak show. You all know that. The current central bank driven, run monetary system is a curse. It is a curse on the world, and we're all paying the price for it. I so wish that more people wouldn't be buying the propaganda about cryptocurrency. You're being forced to stay in the dollar, to transact in the dollar, because a lot of you believe that you're being told that it's a Ponzi scheme. I'm talking about cryptocurrencies. The dollar is a Ponzi scheme, not cryptocurrencies. These are units that are not issued by central banks that you actually own, not like a central bank issued note that is not even yours. It's not yours. It's lent out to you. You owe it back to an issuing central bank plus interest that they create out of thin air. The only way any cryptocurrency could become a threat is if it were widely adopted. And it is not. None of these are widely adopted. Very few people hold these things. And it's a shame. It really is, because if more people would just hold a little bit of it, maybe we could make a difference and take down this fraudulent financial system that we have being run by central banks who are deliberately inflating and trying to very successfully erase an entire class of people. Do you think this would happen if more people were transacting in cryptocurrencies, if more people adopted it? How about no? But again, you stay locked in your propaganda mindset, those of you that don't understand it and refuse to even accept in any way, shape, or form, you're going to be on the losing end. You're already there. Those of you that have not at least had some of this in your portfolios have lost out on a lot. Anyway, look, I can lead a horse to water, but I can't make him drink. So let us move forward here. We got this warning today. And look, this is no surprise. Wall Street banks are all talking about a major surge higher with regard to commodities. I've been explaining to you that you need exposure here. There are many exchange traded funds that can give you exposure to commodities in aggregate. I have one posted right on my website, traderschoice.net, under Gregory Mannarino's top stock picks. People, you need a few things, honestly, right now. Understanding the current environment, and it's not going to stop. I don't care what kind of propaganda dog shit that the central bankers are pushing down your throat. You believe a word that they say? Good for you. Good for you, okay? They're going to continue to inflate, and there's just no other way around it. And they're going to look for other reasons to continue to do that by throwing more cash at every single freaking crisis that they want to throw at you. And they're going to continue to just pull cash out of the future because that's how they function. Without that mechanism, they implode. Again, that's their Achilles heel. We could so get rid of central banks if we really wanted to. If we just circumvented their system, their debt-based economic model is their Achilles heel. But there's so few of us that understand it. There are so few of us that maybe would be willing to do it, that will sidestep their perverted system, making us transact in things that we don't even own, making us work for things that we don't even own. It's just so crazy, people. Honestly, it's very frustrating to me. It just drives me nuts. So anyway, with that said, let us summarize real quick. So the setup for the market's not bad today. We need to keep our eye on a few things here. Obviously, that 10-year yield. All right. Am I spooked by it? No, because it's not spiking in an uncontrolled fashion. Believe me, this morning I'm checking my email. And Greg, you watching the 10-year yield? It's 2.7. Yes, I see it. I look at it every day. All throughout the day, as a matter of fact. But it is not spiking in an uncontrolled fashion. It is rising because the market is pricing in more Fed rate hikes. There's a big difference between the market pricing something in and an uncontrolled spike. When we get that uncontrolled spike, people, you're going to see, I'm going to repeat myself, 3%, 3.5%, 4%, bang, 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 very rapidly. And that's just going to put pressure on the stock market, which is going to sell off. And then we're going to get a massive, even larger move of capital flowing into commodities. Don't listen to Greg Mannarino anymore. Listen to the Wall Street banks. They're telling you, they're warning you or threatening you that commodity prices are going to surge. I mean, duh. It's just so easy to understand how things are playing out and what you and I should be doing about it. You need exposure to commodities. You need exposure to oil and gas companies. You need exposure to financial stocks, although they have taken a beating as of late. But in this rising rate environment where people continue to borrow beyond their eyeballs, it should be a no-brainer to you. And look, I know a lot of you are very impatient. All right, you expect to buy an asset, whatever it might be, and it's just automatically going to go higher. No. Where is it written that that's the way it's supposed to work? It doesn't work like that. And if you can't handle the market, get out. Get out of it. It's not for you. Do something else. There's a lot of other ways that you can capitalize on the situation that we are in. And the easiest way, you know what it is. Holding hard assets here, people. Period. The end. My favorite asset of all time, right here, still remains physical silver. It's, to me, the most undervalued asset on the planet, bar none. Period. The end. You got to take action. You got to do something because they're trying to kill you. They are trying to kill you, and they are. Look at what's going on here. People burning through any kind of savings that they might have had while they continue to borrow. What a terrible spot to be in. I feel so bad for people, what they're doing to themselves. I don't know, man. I tell you, it's really bad, really bad. All right, look, pretty much that's it. Pay attention to these things, people. You knew this would happen with the United Nations now, food price index at a record high. You think it's going to stop? Really? You think the Fed's really going to go out of their way to fight inflation, or they're going to continue to inflate? What do you think is more likely going to happen? And I'm talking about central banks in aggregate. You want a clue? They're going to continue to inflate. They're going to continue to call on our puppetized, they've made puppets of world leaders who are not world leaders at all because they have a one world government now and manufacture crisis after crisis after crisis to throw cash at it. That's all they're going to do in a mechanism to keep the debt-based economic model going. Maybe we had an opportunity, and maybe we still do, to circumvent the system, but we need more people to opt out. Opt out of the debt-based economic system and start transacting in something different. What an epiphany! Oh my goodness! Maybe we could do something like that. Until that time, we are going to be slaves, okay? That's what they're doing. Central banks are creating slaves as people continue to borrow and borrow and borrow more, making people dependent on the system, dependent on government. Do you see what's going on? Do you really see what's going on? I hope you do. All right, look, I'm out of here. Very important video. Please share it, and I'll see you later.